Let's do some trading. We've got Joel Hawthorne standing by, a player himself when it comes to the poker table, but we don't need to talk about that, Joel. I just wanted to give you another shout out since I know Ben already hit you with one this week. DraftKings, what do you think?
Thanks for having me, Alvar. I really appreciate it.
Of course.
And by the way, I like the term payer. I was very chuckled by that.
You try not to be one, but sometimes it happens.
Hey, it happens. It happens. And you and Ben are some very strong poker players. But talking about DraftKings, man, yes, this is one that really has my eye. I know that Alex mentioned some very positive news on DraftKings, but I'm going to take the other side of that trade. I'm actually going to kind of play the pullback here. I think that this gap up we had today is going to be very short-lived. I think that 55 is a very aggressive ceiling for DraftKings. So I'm looking in the short term for a bit of a pullback.
Now, Joel, how deep, how quickly does that pullback potential look to you?
I think since we've had earnings, I think that I don't really see that pullback is going to be very aggressive nonetheless. But I think in the short term, I think right now we've seen so many times that DraftKings has really been, in a lack of a better word, when we think about the ranges traded since probably back in May, that 45 to 55 range. I think we're going to kind of stay in this range a bit. So I don't think we'll break above 55. I'm looking to sell the 53s, buy the 56s for a hedge, risking $1 to make about 50 cents or so. My break even on the trade is $54. So if we can stay right around this range, this is what I anticipate. You know me, you know I love to look at the option flow. Right now we have the puts versus calls. The calls are trading about 5 to 1, but they're very, very bearish. A lot of people are selling calls kind of in that paper is really moving in that range to really play the short game, the bearish side of the play. So I'm going to follow suit, and I'm going to do the same thing.
All right, August 20th. So you've got a little bit of time here, not too much, but a couple weeks to let the earnings kind of work its way through. To your point, I mean, look, looks like we're headed for a red candle. Look, it's early, but we trade as high as 55, and we've faded down already about $3 in this. So it's looking pretty decent for the case here at this moment. And Joel, you're not looking for a giant sell-off. I mean, your break even just a little bit below 50, right?
Yeah. So for me, I mean, respectfully, that 53, selling the 53, anything below 54s makes money for me because I'm keeping that premium. And anything below there is A-okay for me. And that's what I want. I'm gonna play. Hey, yeah, I thought maybe we may get some momentum at that knee-jerk reaction right after earnings, that upside movement. I was kind of expecting that, but that gap fill I think has to happen because we've spent so much time there. I mean, if you look at the technical levels here, I mean, going back until we haven't traded above 55 since June 9th. The last swing high we had was July 1st at 53.39. Our high today is right around 53.79. So as soon as we print slightly above that, I'm sure some of the payers, if you would, we're buying, looking for that breakout to the upside. But I think that pullback that we're currently in right now is realistic, and I think we're going to be there in the short term. Okay,
so the 54 break even, thanks for the clarity on there. So as long as this thing doesn't break out, you're in a good spot. And right now, looks like it's going in that direction with a little bit of a fade here. Joel, like the contrarian take on the post-earnings response. A rally right now, but one that has softened up since the open. Good stuff. Joel Hawthorne, head trader and CEO at themorningsnapshot.com, looking to be a taker, not a payer, but maybe a player.